Just getting started, Nick. Good morning, everybody. Surprise, surprise. This is definitely a shock pattern. Thank you, Mr. Trump. Potent tweets, huh? Well, we're back to worrying about China. That kind of was on the back burner for a while, just I guess sleeping, but I wrote about this pattern in the advisory letter about a bottoming tail bar. And, just the accepted candlestick names, gurus, whatever, will point to this out after the fact as to, oh, this was an indication of a market top. Well, everything's easy to see afterwards, 2020, of course. But what I wrote about was that, look, here was a bottoming tail bar, or right here. And the message of a bottoming tail bar is that there were buyers on the dip, which we can see right here, right? There was the dip down, the Ched Fairman comments, and the move down, and then the move back up on Friday. So, and that's happened in the past. And that was suggesting it's going to push up. Nothing there suggesting that the markets were going to gap down today. So, 2020 hindsight, we see that this gap down here is gapping down below the low. And of course, that's bearish. We'll see how things recover or the lack thereof. But buyers stepped up on the dip. And we just have to look at that from the point of view of what it is. Black and white here. Just a different variation of the same concept. Buyers stepped up on the dip. Red bar ignored. Down, back up again. So now buyers stepped up on the dip. And we look at this and saying, well, is this the same as here? Well, yes and no. I mean, it's still a run up and at resistance, and the buyer stepped up, and here's the down bar. So we'll see where this week ends up. Maybe it ends up with another bottoming tail bar. We'll see. Actually, it would be a green bar if it rallies back, since it's going to gap down over here. And then if it does rally back, you'll have a big green bar. In any event, one of the other things that we spoke about was the fact that momentum was slowing down. And we recognize that as just looking at the initial move, the stall, the next move, and the stall. And the distance between the two is smaller here, so momentum is slowing. You don't need indicators to see that. And, the indicator gurus and the people on CNBC drawing lines with their fingers and all that will show their bearish divergences, blah, blah, blah. In any event, we know momentum was slowing and it's at resistance. And, risk for longs is increasing. Nobody knows the president's going to come out and, tweet something on a Sunday, and, the markets head down from there. So we look at the technicals. We knew quite well that at some point there's going to be a reversal, because there always is. Always. The timing of it, coming up to resistance and this move up, the slowing momentum, tells us that we're in the area. Well, it could have went sideways. My point here is that, look, don't look at things in retrospect and saying, oh, I should have known that, because we knew that risk is rising, but we don't know that in this moment in time, we're going to be coming into the markets and seeing this gap down. And you can see everything here is getting shellacked here this morning. And we'll assess that as the markets open, and Dan will look at a few of these gappers. But we had this rounding pattern here, and the same it was here. And this was more of a complex rounding kind of a pattern. But in any event, they are all repairing the damage patterns, as I like to call them. This was a little bit more damaging with the big red bar, big green bar, and then followed by the big down bar. And here we had these reversals and, these recoveries. So coming into today, it looked like it can keep going up. 300 was the target. And at this point, it doesn't look like it's going to go there, but it's very early in the morning, and we'll see how things unfold. That being said, let's take a look at some of these other markets. All right, so we're not going to really find much different, as we go through these other markets here, gap down, same story. This was up a little bit further than the spiders, showing some relative strength. We did see that technology was having a little bit of a rotation out of that, a little bit where, a lot of stocks reporting earnings were getting sold. So there were warning signs along the way. Well, still, we got to see how far this is going to go. This is a big disappointment here. It's not getting killed as much, but look, this thing looked just fantastic. And this is why we call these shock patterns, because the shock is just the unexpected. And, there are going to be times where there are some clues as to maybe a shock could happen. But by definition, a shock is just that, right? And this is kind of a big one. It's down here, 157-ish was the low, 57, and it's at 58, gapping down below a wide range green breakout bar. Terrible, right? So what do you do with something like this? This is what we call a disaster in a sense, because everything here looked great, big bottoming pattern. Let's open this up a little bit. All right, so there's the move off of the low, this bottoming pattern, this consolidation at resistance, everything looking good. Sure, it jiggled around. I talked about this breaking out like for the last 2 weeks, and there it is on Friday. Here it's coming, it's showing relative strength. Look at the rally on Friday, no pullbacks on the hourly chart. The weekly looks great, and now it's gapping down here. Well, 5-minute low, 30-minute low, if it breaks, we're out, we reassess and see if it can recover again. Does Mr. Schizophrenic, well, he's already emerged his head here. Something is Mr. Schizophrenic, something to do with the president? Are there some collusion there between him and the president? What's going on here? This is terrible. I hate to see this kind of a pattern failing like this, but it is what it is. So we'll just see what happens here in the first half hour of the trading day. Transports, they usually don't move too much pre-market, and that's the case here. But, we had this nice bottoming tail bar in this reversal. We'll see what happens. Mid caps, nasty gap down as well. Basically the bullish patterns that was setting up here, this consolidation, is all blown out of the water. Now it's a matter of, is this the short-term top here? Are we going further down, which we think testing the 200? We're at 355-ish, 356, 50 MA, 200 MA, unfilled gaps, so on and so forth. We coming down here. It's all part of the work that we need to do at this point, and reassess what happens here throughout the trading day. And there's the gap down, as you can see in the futures, down below this green bar. Now, it's at major support here, swing low prior to the higher high. You can see buyers are stepping up. And now how many of them are going to step up? To what degree? Though the weekly chart right now looks like it's going to keep pulling back. It's only Monday morning. Just after 9 o'clock. So we have to keep an open mind on this bar, because what if it's a green bar at the end of the week? We're like, damn, it came back again. Versus, well, if it's a red bar closing at the low down here, the expectation is it's going lower. So we have some factory work to do, meaning assess what's going on here in the first half hour or so, see if this holds this low, whether it starts to rally. And in any event, a gap down like this, I hesitate to say, but but in this market, who the hell knows, doesn't come back and turn into a green bar by the end of the day. We shall see. NASDAQ, it's a sloppy trading range. And one of the things about, patterns that we look at and study them and say, oh, there was the pullback to support and how that held. And, and in retrospect, maybe, tomorrow's a green bar and it's going back up, and we look at these patterns and, in hindsight, it doesn't look like a big deal. It's just a consolidation. But when you live through them, you're like, damn, that was nasty, and so we'll see where this where this goes, but just to mention, looking at patterns and studying them and saying, oh, I would have done this and I would have done that, as opposed to actually living the pattern. There is a difference, especially when your money is involved. And that's why people make money paper trading, and not when they get their money put down on the line. You know, it's easy to paper trade, and these endless paper trading traders, well, you're never going to get anywhere doing that. And these companies that put you on paper trading simulators forever, well, that's a terrible thing as well. You got to put a little skin in the game, even if it's a little. Dow futures, right? Big range already, which I look at this and think to myself, well, like I always would, is that I look at the chart and I say, well, are there any bars as big as this within recent history? Yes. Smaller, bigger, maybe about the same. And the takeaway from that is like, oh, how much more is left to the downside here in relation to just historical norms? And then I look at this and I say it would suggest not too much. Well, but I would say another 100 points, 90 to 100 points, I think makes sense. It's sliced through the 50 here. I don't know if there's a 100 MA. I would assume it's somewhere around here, but this is a void. There's nothing there. Some fib level, imaginary line on the chart. You can see here, I know I've squished up all these pivot highs and lows, but there's basically nothing between here and here, which opens up the door to a bias that prices could come all the way down to the 200. We've got this resistance here. But so far it's consolidating down here. So what we do, right, is recognize what's going on here. And now we've got a pivot high up above. We've got pivot lows down below, which says this is a trading range now. Which way is it going to go? And while this bearish open would suggest lower, and that very well may be where it's going, right down here, this gap down and this run up has created what I call a void. So above this level, you have to think it's going higher. It's just the way it is, right? Black and white technical analysis, trading range, downtrend. Above here, it goes higher. How high? I don't know, right? It's just, this has now created support in a place where there wasn't any. So we'll see what happens from there. Let's continue. Naturally, bonds are up. And here's a little pullback on the 60, a bottoming tail says they're going to continue to push up again, which means interest rates are going down, which opens up the thought, yield curve inversion again, China, tariffs, economy slowing down, stock market going down, and we'll see how far it all gets this time. My fibs. I'm a closet fib trader, gossip, I got to admit. But you know what? In scenarios like this, quite honestly, where there's nothing, and you start thinking, well, where might the turn be? That honestly is a situation where maybe just looking at something like that could make sense. Or in the futures, a trader pivot line, which, you know, this is going to blow through most of them down below with this kind of a gap. In any event, all right, so whether you look at something subjective like that, I got gold here, so I'm just going to use this to draw on for a moment. Let's just say that, you know, this is a 0.682148-3 retracement level. Well, you know, as it comes down there, what are you going to do? Well, if your plan is to sit on the bid and just buy it at a subjective reference line, well, good for you. I hope you have money management as part of your trading plan and you're willing to just step aside if it doesn't hold. But from my perspective, let's say it comes down here in the middle of nowhere. And my thought is going to be, well, it's coming down here or in here. This is where the support is. Well, what am I going to do? Nothing. I'm going to wait for it to come down, and it's going to stabilize, and then it's going to form a pattern. And I'm going to say, well, that pattern's forming in the middle of nowhere. It's a climactic buy setup. I could trade that. Ideally, if it comes down and retests and forms a W bottom, I like that even better. So the concepts that I trade by and teach in MTS is climactic, move down, can create support, which is called a pivot. Climactic buy setup, that's tradable. W bottom, that's tradable. It doesn't have to come down here. Ideally, it does. So we put all of that together. I'd be a million if I only had, I was unable to go long. Okay. Looks like good info from an experience. Thank you, Charles. All right, let's continue. Let Dan probably has a ton of stuff to review with you guys. I don't know. We're lighter on position, so we started clearing. But tons of gappers here. I can't remember the last time I seen this much yellow.
Yeah, but Greg, that's going to be part of the problem. The gap is so excessive that it's going to be hard. In fact, I would rather focus on what's opening positive for relative strength trade.
That's fine. Dan, I don't see it as a problem. I don't see it as a problem at all.
No, I'm saying
unexpected gap.
No. I'm saying an excessive gap. Me looking at gappers it's going to be difficult today.
Okay. Well, if you say so. For me, I just look at them and I see where are they in location to prior support, and then pick the ones that I like or not, or do nothing. So, what's oil doing here? Bouncing a little bit. It's down here. And what I wrote in the letter was, look, what this market has done is to look at things that have gotten killed. Meaning, 2 weeks ago, it was healthcare. What's done the best after getting killed? Healthcare. So now energy's been killed, and maybe that's what can do the best, at least in the short term. So, you see that XLE is lower here at 63, but, it's already dropped quite a bit, and we'll see what it does. It's near some support. So, look, from a swing trading perspective, I think for the most part, it makes sense to stand aside until the smoke clears here. Things that are gapping down, well, as we look at the gaps, are they gapping from a high where it's a obvious shock where longs are caught versus gapping down after moving down for a week and a half? Those can be exhaustion gaps. So whatever the gaps are, as we start to look at them, it's just about common sense. Meaning, well, something like this. Well, not exactly, but it's gapping under a green bar. This has support right there. As we go through these, we see, well, how much damage is being done? I'm not interested in that junk. Microsoft gapping down around 126. That's really not a big deal or that big of a shock. So we just go through these one by one. That's the factory work, and this is on reporting earnings, I think, today or tomorrow. But here's one. It's not that terrible of a gap. So, look, as already said, this is caught many by surprise. And as they digest this information, maybe a new tweet comes out, and it's a perfect world again. We'll see. So that's it for me. Good luck today, guys. Now, we'll be with you in the chat room, of course, you guys on YouTube, but I'll let Dan review.
All right. Good morning, everyone. And like you said, I like your reference of swing trading. Let's let the dust settle. So day trading. But, for us credit spread option sellers, I prefer selling options after a sell-off, because why? You get higher premiums. And Yeah, let's look at opens real quick. We took half our profits in this BABA put spread. I think 75% of max gain. And, you know, you all know how we manage risk, like an insurance salesman. And that's why we continuously take profits while we're in the trade. So we just have a half lot of BABA. And our swing letter, we have a covered call, 140.55. So it's a bearish gap, but we have a covered call and we'll just manage it accordingly. TPC, we're long stock. I can't tell where it's trading. BA, that was a breakout. I can't tell where it's trading pre-market. And the beautiful IWM, we bought call options into the close on Friday. And the benefit of call options is, you know, and we don't pay a lot of time premium. Well, good job, Robert. Awesome, awesome. Good job for you. Is the benefits of buying options intelligently with the charts, less capital, gives you a bigger return on capital. And I always say, in the event of a catastrophic gap, we're going to lose significantly less than being long stock or the ETF. So even with the gap down in IWM, we'll manage it like every other trade. There's still going to be time premium in that call that we purchase. And so our loss, again, is going to be less. So that's it. Those are all our opens. We had a lot of bullish positions in both our letters over the weekend. And it looks like one of them here, I can't tell for sure, but HRS, we were going to sell naked puts. And I can't tell where it's gapping, but everything else looks like it's getting hurt, which is fine. We aren't in them. They'll be invalid. Tyson here, you mentioned trader. And you know what? I had an email this morning from a subscriber saying, you know what, Dan, we've been on such a roll. And so he didn't use the word complacent, but he said he put on many more positions over the weekend, like 8 of them. And I'm like, wow. And I just told him a story of mine, that of my 25 years of active trading. Whenever I personally feel like, wow, this is easy, and things like there's no fear, the trades are just win, 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 win. I use that as a personal contrarian. I say, you know what? That is a sign that I better be on guard for a shock. And we've been saying it for the last 2 weeks that we're going to continue to trade whatever patterns we see, but we have one foot out the door. And Greg even said, I don't know if he said it in the video, but he said it to me in chat over the weekend. He said, you know what, when we do hit the exit, there's going to be stops all over the place. And, you know, it's happening today with a gap down. All right, let's continue. So Tyson, that's just an incredible uptrend. It's gapping down here though. Trader, you said it was gapping up. 73.80. I think that was earnings. There's a couple earnings trades here. Costs, nothing to do there. DK, gapping up. So I'm actually, like I said to Greg, I'm actually more interested. Well, I'll trade anything, of course. But I just think it's harder to trade a huge gap unless I would like a 30-minute basing where it proves that it can't bounce. Then that would be a fine entry. So nothing to do there. And I'm just glancing at my Dow 30.
Dan,
Yep.
what you're saying is, just, you know, for everyone's benefit, is that based on your plan of how you trade, you find that difficult, which is fine. You prefer not to do that. But the thing I was trying to communicate when you first said that was like, look, everybody can trade in different ways. So someone else that has a plan for trading a 1 minute high on a big gap down and is experienced with that and has a plan to manage it, that's completely different. So point is, that's not for you. That's not for me. But for someone else that can do that, it's not difficult. So everyone needs to understand that when you and I say things in that way, we're speaking from our own perspectives, but there's a lot of different ways to skin the cat,
Right.
you know. But what someone else does may not necessarily be good for myself or you, or what we do, not for them.
Right. And I use other silly analogies like, going to the buffet, or being a cook. I think it needs more pepper. You think it needs more salt.
Yep.
CVX here, the Dow 30 is the only one green. Wow. Yeah, as Debbie said, these Chinese stocks are getting whacked, and whatever American company does a lot of business over there. Boeing, I think, is getting double whacked, both for that, the Chinese influence, in addition to more bad news on, them hiding the fact of the defective software. And, I've been saying this for like 2 weeks now, that I'm not touching this until I get a something. So 367 now. It's gapping under this. So now it's a call spread candidate. Apple, I see I'm always watching the fangs here, and I see this Apple weakening here into the open in a minute. 204. Okay, so this is gapping here. I don't know what to do with this. I got nothing here at the open in terms of a tier 1 setup so far. All right, this was earnings also, 2350. It's flat. Arrow, no volume, don't like it. RYN, this came from Alex. Bullish, daily, weekly, monthly. UCTT, I like this monthly. Gap down, Goldman we liked on a breakout, but look, it's destroyed. So many things are just going to be invalid. MAN, I liked over Thursday's high as a directional. PKI. All right, so it's positive, right? So this is relative strength. I like this bottoming action right here with these tails. Red bar ignored. That's a watch. I'm going to put him up here. Triple L was strong, and now it's breaking down. CSX.